So Tucker, we've talked about this in the past, that in a bear market, usually cash, currencies, and fixed income are the first three in some fashion of order there. And so now cash is getting up there. It's in 3. Now it's going to possibly 2. Fixed income isn't too far behind, although that's been a little rough because rates have been going up. So maybe if we had an indicator for floating rate income, that'd be up there, but we don't really. So we'll see. But so we're getting into what I call a scaredy cat market, right? Where everyone's terrified and we're getting into cash and getting out. But there's a lot of things you can do along the way to protect yourself. And we talked about that on the 4-star, shows as well. But the other thing is commodities used to be well in the 300s and it's only at 259. So it's going to take a little while to have commodities leave the number one position, but investors could lose an awful lot of money in commodity holdings between, here and down to position 2 or 3. So you got to be really careful out there. In fact, we're down. We had 7 different commodity holdings in that segment. We're down to 2, and 1 just broke down today. So we're considering selling that too. So it's pretty rough just holding commodities too.
Correct. Yeah. Right now, honestly, cash is probably your safe bet.
I think so. Well, and just talking a little bit about the recent activity since we last met here on the 4-star Today's Market Explained podcast. We had a day when the president of the United States was ready to tout his success of his economy, and concurrent with that presentation, and I think James Taylor came out and sang some music on the lawn of the White House and everything. It was kind of a big confab. But that same day, the inflation number came out for the year over year inflation. They were expecting inflation to be 8.1%, still extremely high, but it turned out to be 8.3, right? I think it was 8.3. And then the market promptly went down 5% that day, right in the middle of the president's speech. So anyway, it's quite interesting. And then, of course, the Fed has been out there looking at interest rates and raising interest rates quickly. So yesterday, I believe, it was Wednesday, we had another 75 basis point increase. And so then, of course, the Fed, is continuing on their plan. The rumors are they're going to have another 75 basis point increase in November. Markets predicting 50 basis points in December and another 25 basis points in January. That's what the market is signaling right now. So we're going to continue to see interest rates go up. And then now also, as of today, the markets have fallen. The Dow, which isn't the best index to follow, but a lot of investors know the Dow Jones, it's fallen below 30,000. So, that's kind of an important signal. So now we're in the 29,000s on the Dow. So that's recent lows. And we're retesting the lows of the previous collapse that ended in June. So anyway, that's where we are. Not a good market, but eventually markets will bottom. We don't know exactly where they are. But now it looks like the Dow has fallen to the lowest point, and we broke the new lows. Just got a signal across the tape. So that's probably a signal to go lower from here. But, we'll see. Now, Tucker, looking at the economy, there's been a few things that happened as far as raises were higher than expected for companies, right?
Yeah. You mean the hiring?
Yes, the hiring and the raises that individuals got. They actually were getting raises and they're higher than expected.
Yeah. I mean, as far as hiring and raises, it's actually pretty crazy. I was driving not too long ago with my girlfriend through North Carolina while we were driving down to the beaches, and we passed a Roy Rogers of all places. And on the side of it, they had a sign that said, $5,000 sign-up bonus and then $17 an hour to work at a Roy Rogers. So I'm, for all those who are probably going to run to a Roy Rogers and sign up, I want some of that commission too.
Sounds good. If you're getting signing bonuses to work at a fast food joint, but they do need people, don't they?
Yeah, they do. I mean, there's a ton of job openings and there's not a ton of people who want to fill them.